Get rid of
Oh,
that.
that's not coronavirus in the background, is it?
God, is it that loud?
That's okay.
You want to say hello to Jeff?
Hello, darling.
Hello.
How are you?
Good.
Excellent. Are you giving Dad a very special day today?
Yeah, Daddy's birthday.
It's Daddy's birthday.
It is today,
Goodness gracious me.
Oh, it's just me again now, mate, because we are live on air. What's that noise? Is that you? Well, you
Sorry,
are quick
Paul.
on it.
Paul's going to get an email.
You are quick, mate. You are quick. It's amazing. Well, welcome. We are live on YouTube. Welcome to everybody, and welcome to you, Jeff.
Cheers, mate. Happy birthday.
Thank you very much. Thank you very much.
Everyone here.
Thank you,
Hope
Crystal.
You have a good one.
Thank you, Crystal. Right, now we are long the FTSE 100. I've got to get into this straight away. We are long the FTSE 100. Now, you won't get the same price as me at this stage, but you might get it eventually. Now, we did okay yesterday. We managed to take profit at the high, move stops to break even, and it was a winning trade. And we are looking for the same thing today, and I quite like it today because we're at a lower level, which means that we may well have a base. Now, I'm in down here, so you're going to lose out on about 45 pips, but considering the volatility, that may not be the worst thing in the world. You know, you've got 4 minutes to wait. The problem here, you want to wait for a retracement, but the problem here, let me just see where that line's right. You've got a little bit of room to the pivot. So there's about 70 pips to the pivot. Unfortunately, 100 pips to the low. So, and that's where you want your stops right now. The problem here is the Bank of England have just lowered interest rates by 50 basis points. So we're down to 0.25%. Now that is bullish for the FTSE. And that's the reason that I got in, you know, regardless of setup. I didn't really have a setup. You know, I got in on this bar here, which everybody can see is a bearish bar. But the reason I got in there was because it did just about test where it came from. So as soon as this bar closed, I was in. Now we are moving, but not too far. We're only about 45 pips to the good. And it might be that that there could be a little bit of a sell-off first. So in my opinion, the best thing to do might be just to put in a buy stop above and a limit order down here. And if it can come down first, then you get triggered in. Now the limit order price is going to be, let's bring this on the UK 500 limit order price. Looks like that's tested already, so around about 59.90, call it. Actually, the daily pivot is on the UK 100, so that's better. That does suggest, I wouldn't put my my entry here now on the UK 100. I didn't realise this market had a pivot there, so that hopefully will provide a little bit of resistance early doors. The closer you can get to the low, the better, because it will tighten your stops up, and you definitely want some stops in down here. Okay, so the entry is going to be around about 59, between 59.90 and 59.70. Take your pick. It depends how fast this market moves. But with interest rates being lowered, that is bullish for stocks, and that is bearish for the pound. And it's amazing the pound has actually clung on, but the pound is just about to hit that monthly pivot. So the other choice is that you go short the pound in this area with a stop at the just above the weekly pivot. Let's see how much room that's got to travel. It's got some room to travel, so you could go short the pound. I mean, that would be another play here. There is around
Should
about.
We wait till the budget, mate, or is it okay?
Oh, I mean, what a fantastic point. Yes, that's a really good point. Okay, yeah, let's not worry about the pound. Let's just focus on the FTSE 100. The FTSE 100 should. I mean, that should be bullish the currency, which is the only thing. But with a lowering of interest rates, that is fundamentally bullish for stocks. And regardless of anything, we have to take this trade. You know, we don't really have much of an option in a lot of regard, because, as I say, these are one of those moments that you don't wait for setup, but you know, an emergency interest rate cut. So there's probably going to be very little opportunity otherwise. But I quite like the base down here anyway. You know, actually, you know, technically,
yeah, sure.
You know, the technicals on this are kind of showing for a. Let me just see if the UK 100 looks any cleaner. It doesn't really. It's kind of, I could explain away a little inverted head and shoulders with a left shoulder here, a head down here, and a right shoulder here. So there is a possibility of some movement here. So that is what we are looking at, mate. Long FTSE 100, and I will add to this if we can start to really stretch our legs to the upside. So that's that, mate. Now I'm going to hand to you because you want to do the pound trade, and that's probably going to be on the move. So we should get to that as soon as possible.
Yes, well, it's going to be in for an interesting day, and that news, of course, the BOE is potentially going to throw it in all sorts of directions. I agree. The first move, one would think, would be down, given just a half a percentage point interest rate cut. But yeah, we're not in normal times, and that's
it's interesting that it's holding firm. Now I'm going to stop sharing so you have the screen, mate. But interesting times that we're not. You'd think that would be an absolute but tanking. But you know what? You're absolutely right. I hadn't considered the budget, which is pretty remiss of me, actually. A little bit unprofessional, to be fair. But I would suggest that you're still looking for the shorts, but maybe you could actually wait for a decent setup on this. Let me just see if there is.
Well, mate, there's a couple of ways to look at it, isn't there? Really, if you're inclined to get into the move now, and get maybe a really cool ride on the back of a budget that isn't kind, then it may be worth the risk of a small percentage of your account.
Do you know what the interesting thing is? The budget is likely to be pretty expansive, and good morning, Lewis. Good morning. The budget is likely to be pretty expansive and disclose quite a lot of boost for infrastructure. So that is potentially good for the pound, which I suppose is maybe why it's not shifting. But if you think, do you know what the trade for me is the euro against the pound rather than the pound dollar. Even though the euro is just, huge. Have you got the screen, haven't you? You have a look have a look at the euro pound hourly. It is an incredible bar, considering we just had an interest rate cut.
Yes.
Look at that bar.
Absolutely.
Flying to the upside, flying back down again. But we're in a buy zone. And I have to say, even though that bar is there, I would still take a punt on this to the upside. I don't particularly like the bar, obviously, but I'd still take a punt on that to the upside. Oh, you're long there, are you, mate?
It's not me, actually. That's okay. I'm on the ATW account here, and it's a daily wave rider, actually.
Oh, brilliant. Okay.
You'll recognise that. I won't, because there's no possible way I would go long here.
Yes. Yeah.
But you would recognise it as a daily wave rider.
Yep. Yeah. Certainly do. Okay, mate. Well, let's get to the pound trade and see how much detail we can give it.
All right. I'll go through this a little bit by bit, if you like. What a dreadful candle again. Because there were some questions yesterday about how we're actually trading this. My goodness, how would you like to go long here? No thanks. How would you like to go short here? No thanks.
Yeah. Yeah, and this is, if we're talking about heightened volatility because of oil and the coronavirus, and this one it's almost the worst to trade through this, isn't it? We've also got the interest rate announcement and the budget announcement too.
Yeah, look, I think I can promise you one thing. If we get in here in the right direction, this is going to move a fair bit today.
Yeah.
And if it goes in one direction, I think there's probably a good shot. But if it doesn't, and budgets are prone to do that because they're not a number, they're a statement which covers a whole vast array of areas, so it could be interesting. For that reason, I wouldn't be trading this with any confidence at all. So, and it is in beta test mode, guys, so please, if you are looking to trade this, you need to have very, very little stake on this. I can advise you of that, number one. But here's the thing. What we're doing is we're trading the breakout of the range of the 3 candles, 1 hour candles prior to London Open. Now, those three candles are this one, and this one. I don't need to tell you that the range is the same as the last candle. So we only need to look at the high and low of that candle. Dreadful, dreadful candle to be trading. But anyway, here we go. I suppose in some regard, if you're looking from a candle point of view, there's every reason to think this can go long. If not, then and you are aware of what's just happened with the Bank of England, then you're probably thinking, oh, I don't want to go long here.
I tell you
But anyway.
what, I'm looking at a FTSE 100, which is struggling to pick up any pace. And if this does move down after an interest rate cut, that is incredibly dangerous for this market, and it could really fall quite heavily.
Yeah, if it's not going up, it's something else is going on, isn't it?
Yeah,
That's right.
yeah.
Yeah.
I mean,
and
it's
this
stable.
may well be the case here as well.
Yeah.
Anyway, let's place the trade. So the rules for the beta test are these. We trade the last three bars, or the range of the last three bars. I think that high is pretty much the same, 130.50.2 versus 130.50.2. They're exactly the same. So we'll just use that as the high, and we will trade long 15 pips above the high of this bar. So the high of this bar is it's just changed on me. 1.293. That sounds a bit better, doesn't it? 150 would be handy. 1.29366. So we're rounded up to 1.2937 and add 15 pips to it, which gives us an entry level for the long of 1.3952. Now let's put that in the market. We'll go actually, I'm on the wrong account here, guys. I've got to go to, sorry, mate.
I was just going to say, StarMax, yes, the interest rate cut by the Bank of England. That's put us in a long in the FTSE 100. So if anybody is interested in that, then there's a long in the FTSE 100 due to that interest rate cut. Really, the pound should be looking for a short, but we might be waiting for the budget. Yes, pound dollar would probably have to go down, but you know what, StarMax, maybe a better trade would be euro pound to the upside rather than the pound dollar down, because the euro's been pretty good so far and they haven't moved. So without those guys moving, then it would suggest that that the pound versus the euro might be a better trade. And if you consider the euro dollar, that might also help you make the decision whether you should be trading pound dollar short or euro dollar long. I mean, that is really the logical answer, isn't it, Jeff? You would look to go long stocks here. So we're looking at long indices, long the FTSE 100, short pound dollar, and long euro pound. They're the logical trades here.
I fear we're in an illogical market.
Yeah. Do you know what?
That's the issue that faces
I'm going with logic because it's the only thing that I can understand.
Absolutely.
Right now.
And you've got to go with what's in front of you, and what's in front of you is a technical setup backing up a fundamental scenario. So
yes,
it's a no-brainer. What probably is a reasonable idea is keeping it light as your first entry, maybe.
Yes, absolutely right. And then scaling in, that's the answer. Because if it's going to start trending, there's going to be a lot of opportunities to get into this as you go. So yeah, I agree with you, mate. Keep it light and do that. Now the Carney is out at 9 a.m. So Mark Carney is due out in around about 50 or so minutes, and we also have GDP month on month from the UK manufacturing production. I mean, I guess these numbers are going to be fairly arbitrary after this. We will want to know how healthy the economy was anyway, because if the numbers aren't too bad with that interest rate cut, that really should boost stocks today. Annual budget releases at 11:30, so that we're really looking right up until midday before we get a clear run on the pound. But if you're, as Jeff says, if you're in the right direction, but going into those statements, and those statements back up your direction, then it could be a great movement today in the pound.
Yep, you could get a very good ride. Absolutely. 1.2827 becomes 1.2817.
So Jeff is just going through the pound trade. If any of you got any questions about this specifically, the specific sections of it, then please do put it in, because we're trying to go a little bit slower today, so you guys get it.
Okay, so what I've done is put in 2 orders. One is a long, 15 pips above the high of the range of the last 3 candles, which is this candle, and this candle. When I say last 3 candles, the last 3 hourly candles before London open. Okay, so today that happens to coincide with the last bar, because we've got equal highs here. So what I've done is put a long entry 15 pips above the high of this bar, and I put the stop loss 10 pips below the low of this bar. Now, because we're trading this in either direction, so the idea being, if we break out long, we'll trade it long. If we break out short, we'll trade it short. If it does trigger the long, we will cancel the short order. And if it triggers the short order, we'll cancel the long order. Okay. Once we are in the move, or once we're triggered, we will then switch to a 15-minute chart, and we will trail 2 bars, whether they be buying if we're going long or selling if we're going short. And what I mean by 2 bars, let's go to yesterday's trade, unless you've got something urgent, Ash.
No. Let's do that. Just quickly. Good morning, LT and Orlando, mate. How you doing, buddy? Good to have you here. Good to have you here. And Crystal, let me just check your trade for now, but we can get to your trade in a moment. Oh gosh, that is moving a little bit. It depends where your stops are, but hopefully we'll have a chance to talk about that after Jeff's done this section, and you won't be out already.
So let's take a look at yesterday's trade. So the 9 o'clock bar is what we're looking for, which was, from memory, one of these 2. That was the 9 o'clock bar. Okay, so we had a range of this candle, this candle, this candle. So we took the high of this candle, put a long entry 15 pips above that high, which is around about there somewhere from memory. It might have been 84. So we didn't get triggered long. We put an entry 10 pips below the low of this bar. We got triggered short on that one. I think it was 30.06 or 04, can't remember exactly. So we got triggered in there. And then as soon as we got triggered in, I'll put a marker there so I know exactly where I'm up to. So we got triggered in there, right, on this bar. And then we shifted to a 15-minute chart, and we trailed 2 bars. So after we got triggered here. We then trailed 2 selling bars. So if you get 2 selling bars in a row after triggering, there's 1 sell, 1 buy, 1 sell, 2 sell. So if you've got those 2 selling bars, you trail your stop. So your stop would have gone to there. Actually, let me use that other line. Your stop would have moved to there. Then you got another 2 selling bars. So your stop moved to there. Another 2 selling bars. So your stop moved to there. Another 2 selling bars down here. So your stop moved to here. And then you got another 2 selling bars here. So is everyone following this? Hope so. So your stop moved to there. And that was the end of the section, because the price came back and took your stop out, right? So your trailing stop went from wherever that entry was, I can't remember. I think there's about 70 pips in it or something like that. Yeah, something like that. So that's how we're trailing, or that's how we're trading this at the moment. If you've got any questions surrounding that trade, then please ask. I'm also giving you the opportunity to tweak this as well, not necessarily, but give us some ideas. If you see something we're not seeing, then please give us some ideas around this. What we're trying to achieve here is the best way to actually trade this breakout of London session open. It's as old as me, and that's saying something. we're just trying to tweak it to our own devices, and if we come up with a reasonable solution that that gives us a nice return on our money, then we will keep this in play. But it is in beta test mode at the moment, so please trade accordingly if you are looking to trade it. Okay, Ash, that is the pound trade. No trigger yet. And do you want me? Have you got to go back to you?
No. I just wanted to get to some of the questions and comments.
The questions, right? Let's shoot.
Firstly, just briefly, Orlando. I personally, I just think we're just waiting until the statement from Carney and the budget. I think that's all it is. I think the smart money is still for £1 short. I don't think we should be too worried about the price action currently, because it's probably going to bobble around until we actually get some absolute clarity for the day. And I just think that personally, I think that's all it is. We haven't got absolute clarity. We just got a headline number with a news conference booked and a budget, which is massive. You know, the budget is a huge aspect. And you know, one might cancel the other. It might be one of those. You know, but I still think that the smart money is on £1 short personally. Probably picking the right currency pair is the key, because obviously the United States have already dropped, but the euro hasn't moved. Now let's talk about the euro, because Crystal's saying it's PH's trade from Tuesday. So let's have a check on that. So that is a wave rider.
That would have been, what was the cross? Euro pound, was it?
Euro pound, yeah. So let's have a look at it.
Okay, now I'll go there, but you know I'm not supposed to do minor crosses on this show, right? But there it is. There's you'll have to talk me through the trade, because I've got no idea how daily wave riders work, mate.
Well, we're on Wednesday, so that would be from yesterday. Let's have a look at the entries here. Can I ask you, Crystal, where your stop is? Could you just put the levels in for me? To just give me the entry and the stop price, because that will dictate if how we're going to manage this.
I imagine here is the stop loss, but I could be wrong.
Yeah, cool. I mean, it's that the aspect with I guess that'd be a a type of QE from the Bank of England. All that stuff probably will unfold as we go, and it's probably going to be about the statement. We'll check out what Carney's got to say about that. I'm still pretty comfortable with a long in stocks at this stage. It looks okay, looking pretty good. We're holding fine. Okay, so the entry was 0.747. Can you mark that off for us, Jeff?
So what's this then?
This is the euro pound. Euro.
This is another entry.
No. Oh God. Hold on. What was that? 0.8747.
Well, that's that line. Yes. That's what it says buy.
With stops. God, that's high.
That's what it says. No way I would have taken that trade, but I don't trade that strategy.
Okay, geez, that's kind of high. Okay, 8747. Why is he taking? Let me just double check.
8684, which is there. So I'm on a daily chart. I've got no idea.
8747 from
Tuesday.
Tuesday.
This candle's been traded. Tuesday. That is there.
That's yesterday, isn't it? Goodness me. Okay.
This must be a new system, new way to trade.
Do you know, it's very difficult for me, Crystal, because I shouldn't really be commenting on other people's strategies.
Strategy.
Yeah, and I don't want to do that. I can only give you the opinion, my own opinion. About this, and it's not because I don't think the euro pound is a good directional trade. I think directionally, I think it's pretty good. Oh, we used the bar from last week. Okay, use the bar from last week.
That one.
You sure that's the price? 8.8747. That's incredibly high. 8684. 8684. Uh, 8684. I mean, the 8684, that to me is the entry. I would understand that as the entry. I'm not sure if maybe you got
Yes, I get that.
Yeah, so maybe the numbers were, maybe you got your numbers wrong, possibly, Crystal, because the
No, because this is what he's obviously traded it on this chart. That's the entry.
That one there.
Yeah.
Yeah, but that's where the stop loss is currently.
Says buy. So that's the
Oh
entry.
gosh. Okay.
So I can't comment because I've got no idea how to
yeah, I mean,
works.
it's a difficult one for me to comment on, Crystal, because I don't know what PH's thinking was, but that's high. That's a very
well, you knew
high.
something because it burst through there and gave him 100 pips in a heartbeat. So,
but the thing is, though, he's trading on longer term time frames. So the 100 pips in a heartbeat would be fine on an hourly strategy. But
his risk was 60 pips, so he's obviously taken profit.
Oh, he's taken profit. Okay, well, in that case, leave it where it is. I would leave it where it is. I mean, actually, you know what? The stop isn't in the worst place in the world. It's it could test that area and take you out. So it might end up being a break-even trade, or if you manage to take some okay profit, it might be okay. But yeah, leave it run, because really the pound should weaken from here. We don't know whether it will. Yeah, I would clarify with PH tomorrow morning. But as Jeff says, if that's popped up 100 pips and he's already taken profit on half of it, then really you've got a free trade. And what we're always trying to get to is a free trade. So because that is really the golden ticket, then it doesn't really matter whether the trade runs really far or not. And I'll tell you why, Crystal. Hit TP1, brilliant. Yeah, undoubtedly hold. And I'll tell you for why. Mainly is because if the strategy dictates those particular levels, and it dictates that you don't do anything until your stop is hit or your take profit 2 is hit, then it's so good for your mentality to see it through, whether it's a winner or a loser. Because the point really about trading, and this is the thing about strategies. Strategies are great, but they don't make you money. What will make you money is your mentality. Not if that's not the strategy rule. No, leave everything where it is if that's the strategy rule, because that's, as I say, it's the mentality and the process that makes you money, not the strategy. Because the strategy itself will be traded in many different ways by different people. But the only way that you really break through is to trade a strategy correctly, and note down the trades and note down the journal properly, so you get statistical evidence of whether it's working. And then, and only then, do you start doing things like moving stops before you get out of trade. Everybody trades slightly differently. I'm somebody that will trade from how the market's unfolding, because I'm trading intraday, if you like. But when you have a longer term strategy, you've got to just let it flow, because that's how it's meant to be. And actually, this really could take off to the upside anyway. So if the strategy rules are leave it where it is, leave it where it is. It's just so much better for your mentality, and that's more the key than the strategy itself. Right.
And again, I'm not commenting on anyone else's strategies, because like chalk and cheese, the way I trade and the way daily wave riders trade are like chalk and cheese. So where I would not enter in 100 years is perfectly fine to enter for another strategy.
Yeah,
absolutely no drama at all.
Yeah, I totally agree. And this is the thing,
if you get 100 pips out of a trade in heartbeat, then happy days.
Yeah, I mean, if you're a break
maybe I
even,
should be looking at that.
Yeah, if you're a break even on a trade, then you That's the golden ticket, as I say, and that's what we're all trying to get to. FTSE 100 is just cutting back now. Now, I did say to everybody, do you mind if I take the screen just for a moment here, Jeff?
Go hard, mate.
Okay, so I am long the FTSE, and you guys may well get a similar price to me now, because this is cutting back. And I'm sticking, but this is the thing. My personal strategy here is to stay long FTSE, regardless of the fact that price is coming against me, and it's coming against me fairly hard right now, because now I'm in down here. I got in on this bar. So you guys, if you did want to enter, I will give you my reasons for entering, and then you can make your own decision on it. The reason I've entered here is because an interest rate cut, if all things being equal, will boost stocks. Now, that might not happen today, and if it doesn't, then something is extremely off kilt for one, and looking pretty dangerous for stocks if an interest rate cut can't boost it up. So that does make the sentiment out there pretty bearish. But stops are at the low, so they're nice and tight. Gone in quite light, because if this is to take off and I get a good trend, I can add and add and add. If it gets taken out, then I lose very little. So so that's where I'm in. I'm in at this particular level here, and you're about to approach that. You're about 12 pips away from that. So if you guys wanted to do the same thing, that's the price. And then you see how it runs. But you've got to accept that we are in a market which is fairly skewed here and a bit confused, and doesn't really know what it's doing. So it might end up stopping us out, and it might even end up turning around and going. And even though on a normal environment, I would look at the volatility and suggest that stops could be a bit looser. I'm not really that willing to do that. I might even look for another entry later if something shapes up. But we didn't get a good buy entry. All we've got is an event, a news event, which normally should promote stocks. Now, so far that happened, but it's just starting to cut back. And as we start to approach the Mark Carney business conference, the Mark Carney rate cut meeting, that might even come back a little bit further. We might even get chopped around here a bit. And when we approach the budget, it could be even worse. So maybe there are other factors out there that don't make the interest rate cut stocks going up a zero-sum game on this particular occasion. So I'd prefer to get stopped out and then sit on my hands rather than looking for other entries. Unless what we get is the news then having to being able to have unfolded, and then we get our decent setup. But this isn't a decent setup. It's just a price point. There was a burst through on the 5-minute chart. This is a cutback on the 5-minute chart, and it could even come down a little bit lower. So it's somewhere in this range that you're looking for an entry if you want to take part in this trade with me. If you don't like it because of the way the price action's moving, completely get it. But my idea here really is to see if we can get a decent run to the upside, and then see if we can get through this area, add somewhere around about here, and then see what the weekly bar is starting to look like. And I quite like to, in my mind's eye, imagine where the weekly bar could end up. And if we look at this chart, this may or may not happen, but we are up from the lows currently, and we're about halfway home to this point. Now, if we get to this point, and the gap also interests me, we've got plenty of gaps going on, but this gap interests me as well, as does the trend line, as a possible place that we could get to. Now, that is 600 pips away, and that sounds probably quite ambitious. But considering the heightened volatility, it could do 600 pips in a matter of a couple of days, the way that things are right now. So I'm trying to look at this and saying, if I've got an entry down here, near the lower end of this bar, and this bar can end up near this point by the end of the week, I can really hold on to this trade and see if we can actually get the boost back up to genuinely retest a level, which will probably promote some selling. But by that time, I would have taken a pretty big chunk out of the market, with potential add points all the way as well. So that's my thinking here. Very shallow stops. Stops of around about 60. Yeah, it's about a 70 pip stop loss, which if we're looking at what would be 700 from entry, then we could potentially be looking at a 10-to-1 if things work out. So that's why I've decided to go in and the thinking behind the trade here. So Lewis is explaining about the stop loss movement and stuff for you there, Crystal, and hopefully you understand the strategy anyway. I'm sure you know what you're meant to do, but if you don't, then Lewis is there to help you out. Do you think that WCI will go bearish again, or can still go long for a short? Okay, right, here we go. WTI. This is the situation. The Americans put sanctions on a company from Russia that were effectively they cut back this contract from this Russian oil company, and then started to flood the market with crude. So that has really put the nose out the joint of the Russians. And that is why the Russians are flooding the market. And effectively, when they got to the OPEC Plus meeting, they couldn't come up with an agreement to cut back production. So the Saudi Arabians and the Russians now are flooding the market with supply, so with oil, as are the Americans. Now, to me, that does not suggest that we should be looking for a long in WTI. And I wouldn't even want to go long to go short. And as you know, I love that trade. But I wouldn't even want to play with that particular scenario in this environment, because the coronavirus itself has already, and this is the thing, it's a double whammy for oil. The coronavirus itself has already decreased the demand for oil as travel starts to depreciate. And then you have a flood in the market with all this crude being produced. And you have a problem with Russia and Saudi Arabia that can't come to an agreement, because they could change this very, very quickly. So until they get around the table, or hint that they might get around the table, WTI for me is a short. And it's just, I'm guessing everybody knows the term dead cat bounce, but I think what we had yesterday was a dead cat bounce, and I think we continue lower from here. Whether you get an entry and a decent setup, I don't know, because I don't trade oil. But it looks fairly similar, doesn't it? You know, when we look at the oil chart, it looks pretty similar on the daily as the FTSE looks on the weekly chart as the FTSE looks on the weekly chart, because you also have this big gap down here, and what is currently a spinning top, but you kind of want to be at the top of that end. But because the fundamentals for me just don't stack up, I think oil at best stays here. And at worst could really start to go lower, but then that is subject to change, obviously, and things are moving so fast. We just had an emergency interest rate cut, so we cannot assume anything. We cannot assume anything. So if you like a price, get your levels in, but look to scale in to anything you believe. Someone said send in a droid. A droid? What do you mean? Do you get that, Jeff?
Oh, they're Star Wars things, aren't they?
Yeah, but what does that mean, though? To do what? A drone?
I don't know. Blow the place up. I got no bloody idea.
Oh, do you know what? And then you got on the other side of the world, you got little rocket man doing his shenanigans. He's like, hey, no one's looking at me now. Let's get some testing going on here. So yeah, he's at it on the other side of the planet. So yeah, it's looking pretty grim out there right now, I have to say. I mean, the question with all this is, how low can oil go? How low can stocks go? How high could dollar yen? How low could dollar yen go? So, these are how high could gold go? But yesterday, certainly technically speaking, on the FTSE and on the S&P, so on some of the American markets, we seem to be creating a bit of a bottom. We seem to be creating.
You're talking my language.
We seem to be creating. And a bit of a low down here. We seem to. So the question is, what drives it? Now, we're starting to get stimulus packages. I'll tell you what, Donald Trump did. Did you know about Donald Trump, mate? Did you hear about all this? So Donald Trump,
Little bits and pieces.
we were talking yesterday, weren't we, about how Donald Trump was introducing a stimulus package. It was going to be the best stimulus package, and it was going to be.
It'll be great. It'll be great.
It'll be great. It'll be great, and it'll be a stimulus package that nobody else in the world has ever seen before. It's going to be beautiful, a beautiful stimulus package. And you know what happened?
SFA.
Absolutely. He didn't turn up to the press conference.
Oh, no.
So the announcement was going to be made. And they were like, where is he? Where is he? And he didn't turn up. So
Donald, where's your trousers?
Yeah. So what had happened was he didn't get an agreement in in Congress or the Senate. I can't even think which would be. I guess it'd be Congress. He didn't get an agreement in Capitol Hill. So he had nothing to offer anybody. And all of a sudden the market's like, oh, this is a bit of a red herring. And it was interesting price action yesterday because this is what happened. So we had Donald Trump announces that he's going to give us a stimulus package. Gap to the upside. FTSE 100 goes to this point. All of a sudden, CNBC report that that Donald Trump hasn't got an agreement with anybody in Capitol Hill. The market starts to go, and then we have this announcement that Donald Trump's coming out to speak. And then when it happens, Donald Trump comes out and he just speaks about the medical. You know, he had a press conference, but nothing to do with. So they're all asking him about this stuff, and he's just walking out, and you just hear his aide just going, "That's enough." Yeah. Unbelievable. So, but anyway, the point is that it is front and center. You know, we've got an interest rate cut from the Bank of England. We've already had one from the Fed, and we're going to get another one potentially on the 18th of March. And there will be some agreement with the American government about what packages that they can provide. So we may well be finding a bottom down here. So it could be the same on WTI. It could be the same on the Dow, and well, in fact, it will be the same on the Dow if it's the same on the FTSE. It could be even the same on the dollar yen. So there's lots going on here. Now, what is going on? Because the pound is starting to rally pretty hard here. Unbelievable. You know, look at that. It's tricky, that, isn't it? Goodness me. This is going to be an interesting day for the pound, mate. Interesting day. And you know what? I wouldn't take your eyes off this one and if you get stopped out, enjoy getting stopped out. Enjoy getting stopped out at the best trade for now for me, Chris, with a pound rallying is a pound short. You just got to wait for a setup by the looks of things. Yeah, that's what I mean. The market appears to found a base. So it could be turning around, you know, from this area. It doesn't mean it's soon necessarily, but it could be turning around from this area. That's the way it appears to me. I don't know whether I'm right on that, but that's the way it appears. Yeah, but the Bank of England cut. Yeah, so the best trade, as I say, I still think the best trade is pound short, but we're probably still waiting on the budget. But the other thing is, as the pound rallies here off the back of an interest rate cut, all that says to me is that you might well get a really nice setup on this one. It's better that it does start to rally because you're going to get a better price. It makes no sense. Pound dollar, not too sure on, but I like the pound euro personally. I think that's still a pretty good play. But you know, I could be completely wrong about this, but in a perfect world, that would be the trade. And you know, equities long as well. You know, we're looking for the FTSE 100 long, and that's still not taken off. But it does smack of a little bit of waiting right now as we await Mark Carney's statement and we await the budget. So it could be a pretty tough morning. But if you're still alive by 11:30 UK time, which is in around about 3 hours, then look to get in front of your charts then and get some trades on the pound and maybe even the FTSE 100 at that point. But I'm going to stick with it for now anyway. But yeah, that's pretty much what I've got, Jeff. I don't know where you're at there. Oh,
right,
gold. Sorry, when you're ready, mate.
Right.
We'll come back to it. But PL's asking for a comment on gold. But let's have a look at around the grounds on your charts.
Roger D. Okay, it's not going to be very similar to what you've described, I've got to say. And as you know, in this show, well, probably those of you joining us for the first time have no idea what I do. And what I do is look at the majors only in this show. We do Ash and I do a 2-minute brief, it's called, I think. And we post it in a folder in Dropbox that you guys can gain access to. And for the life of me, that link escapes me at the moment. But if you want to do that, that's fine. But talking currencies, I only look at the majors in this show. So that's why we're looking at this chart only, and we'll go through the 7 majors as I see them at the moment. You probably noticed that I've got every single one of them on the monthly chart. And there's a very good reason for that. The reason for that is I think the market is in complete disarray. I would agree with that. But I also think whatever emotions drive it and whatever reasons the market has to move, it will move to a point that is technical, and it will still do the same things as it's always done at that technical point. The probability is that that technical point will be far beyond where you would imagine it to be. So in other words, it may well go through 1 resistance level, 2 resistance levels, 3 resistance levels before it actually finds where it can't bear anymore and it has to pull back. Why? Because it has in the past. Why? Because people take profit at those levels. Every man and his dog knows that this thing does not go in one direction. And this is why I'm now turning to the monthly charts to give me those levels that I believe will be bounce points. In this chart, euro dollar on the monthly chart, we've reached that bounce point as far as I'm concerned, which is why I got out of the trade that we've been in for two and a half weeks. I got out of that on Saturday morning, closed my trade. No, I didn't. Sorry. I put my stops up to within 20 pips of target or whatever it was. And we got maximum out of that. I think we missed out on about 30, 40 pips. That's it, out of 600. So that's why I'm looking at these levels, because I think the market will react at those levels. And if that's going to be the case, that's where I want to trade. So in euro dollars case, where do I want to go? I want to come back to here, because this is a major level that's been broken. We've been in this range. I call it a range. It's actually a descending channel since June of 2017. And we've finally broken through that. Why on earth would I think that this could go any higher than a strong resistance level? I don't. So therefore, I think we're due for a pullback. Understand that there's an incredible emotive reaction to a worldwide event. But as I said before, I think the coronavirus was a trigger, and only a trigger. The market was waiting for a trigger, and the market has reacted to that trigger. It's gone bang, and it's gone bang with a big bang. But I still believe we'll go to a technical level and come back off it. So euro dollar for mine has reached that level, and I'm looking to trade it short. Obviously, I'm not going to trade it short on the monthly chart right now. So I'll just zoom down a little bit and see if I can find a way to get into this short. Where do I think it's going to come back to? Well, like I said before, at least this level, at least this level. So I'm looking for a reason to do that. What am I looking for? I'm looking for maybe a double top, maybe a head and shoulders, something of that nature, and then a lower high. Does anybody see something like that on this chart? Maybe you do. This candle looks interesting, I'd have to say. So I just keep going down the time frames until I find something that I want. I've got a double top sitting here. I've got a break of a neckline. I've got a retest of a neckline. I've got a lower low. I've got a potential lower high sitting here. Is that the trigger we need? Perhaps it is. But they're the kind of things that I'm going for at the moment. So if I get a reason to trade this short on any time frame, then I will absolutely react to that. There's going to be my first reason, and it's on an hourly chart. Would I go short now? No, because I want to trade as a false break of resistance. So I'm waiting for this to break to here, find maybe this level again, get back underneath the resistance, retest it, then I'll go short. That's what I'm looking for. This is going to be exactly the same on every single chart that I'm looking at. Where is dollar yen going to bounce from? Not a bad point right there where we are. We've had a flash crash in that, of course, went straight back to the bottom of the channel. And now we're looking for that to do what? Go back to here, maybe. But I'm certainly looking at that as a bounce level. And again, I'll just drill down on the charts and go, well, okay, what do we got? We've got double bottom, we've got a higher low, potential another higher low. Don't really like this because I'm trading into the weekly pivot, but we had a break and a retest of the trend line as well. That's the sort of thing I'm looking for. So I'll go down to the 1 hourly chart again, and if something suits me to trade long here, it's exactly what I'll do, because I am getting double bottom, higher low, higher high, higher low. It all makes sense to me. So that's why I am where I'm at. And pound is no different, except that I don't see a level for the pound right now. I do see a double bottom, very clear double bottom, and I'm waiting for a higher low. That's what will get me interested in pound US dollar. But at the moment, it's in no man's land for me. I really can't pick a direction. I think that maybe we're going down maybe to this level to match it, put in that higher low. That'll give us a nice inverted head and shoulders. Then I'll be looking to trade. Have I got anything for you at the moment? No, I don't. But this is what I'm really, really concentrating on. Massive double bottom potential here on Aussie US dollar on the monthly chart. Sneak it down to the weekly. It's a bit dodgy, but there's a tweezer bottom hint there. Double bottom hint on the daily chart. So I've still got that potential for this to go long. Oh, I hate to say that, Ash, because I'm such a bear, the Aussie. It's really, really difficult for me to say long and Aussie in the same sentence. But
oh, do you know, mate, I'm kind of with you though, because as I say, if we are falling a base down here, then the Aussie's surely one that's going to rally.
Well, surely
it's a buy zone, isn't it? To be fair,
it is kind of a word that and
yeah, you're right.
That I don't put together either.
Yeah,
But yes, the absolute technical levels that we're sitting at here right now would suggest to me that we're going to rally, and we're going to rally back to a support level or resistance level. Dollar CAD's in exactly the same position. We're at a very, very strong resistance level. Do I expect it to break through? Maybe it does, and if it does, happy days. I don't get wounded, but if it looks to come back, and I look for it on the smaller time frames, that's exactly what I will do.
Another one that needs some help with oil, doesn't it?
With oil, absolutely, yes. Keep your eye on the oil chart. Yeah, absolutely true.
Yeah.
US dollar Swissy. Now, I don't know, the Swiss National Bank last week or the week before were talking about intervention because they thought the Swissy was too high. That's interesting. So I don't know where that stands at the moment. I haven't heard any more. I heard the whisper, but I didn't hear any more from that. But this is in a massive range, and it's at the bottom of that range. If I can trade off the bottom, look for a higher low, that's exactly what I'll look to do. Kiwi, not dissimilar, also at a strong support level right through here. You can see that. So although, and my point is this, and I go back to exactly what I said in the first instance, the coronavirus has triggered a move in the market that's been coming for a long, long time. It just needed a reason, and the reason's been given. But I do not see a reason to go beyond technical levels that are already in place and have been since, as I said before, Moses played fullback for Jerusalem. So I don't see any reason why they won't work again. So my tip to you is look at these levels and do not trade through them. I'm not saying trade at them. I'm saying do not trade through them without taking something off the table, because your risk is very, very strong at these levels if you're looking to trade the momentum trade, if you like, or the emotive trade that all of us have been subjected to in the last week or so. Have I got any trades at the moment? Look, to be absolutely frank, no. But as soon as I see these possibilities to go short on euro dollar in particular, I think I will. And all I'm doing is looking for a break of resistance and that to be proven false. Why? Well, because of the volatility in the market at the moment, I see liquidity issues for people who are trying to trade in particular directions. So let's say if you want to go short, the best liquidity is not at support. The best liquidity is at resistance, because that's where the stops are. So that's exactly what I'm looking for fake outs. So if we get a long here that hits resistance, gets back underneath here, then I'm short. And it's going to be the same on every single chart. So no, I don't have a setup just now, but I think in the next few hours, maybe tomorrow, they'll be, no, I think today, I really do think today, that there will be setups coming left, right, and center.
Can I say, man, there is a setup on the pound as we speak.
For you?
Well, for it does qualify. If I take the pound trade short here, then I am effectively in the same trade with the FTSE.
Yep.
But if people wanted to trade the pound, there is an entry point.
Okay, you're going to share that?
FTSE. Yes, yeah. Let me talk you guys through it, because this looks quite nice actually, and it could be a pretty lucrative trade, and you can go in hyper light because it is such a nice potential entry. So look where we are.
LT, to answer your question, always for me, the fundamentals will drive the market, but it will only drive the market so far, and that will be a technical level.
And we are at that technical level here with the pound. The pound is on this weekly pivot. Now, the trade is for a short, and the trade is for a short under this 15-minute bar. And it's a good one because if you can get the short under the 15-minute bar, then you've got a bar to put your stop, which is above the 15-minute bar, above this 15-minute bar here. You want to leave a few pips above. Now, the reason I like this trade is because if it does enter, and you absolutely want to trade the break of the bar rather than rather than just getting in here. If you get the break of this bar, you can take profit at the monthly pivot. Now, it's not quite 1-to-1, but the good thing about it is that if you do manage to get your profit if you can take your profits at the monthly pivot, then there's every chance that the pound goes and it tanks. And if it does tank, you could be looking at a really good trade, because that's going to be, it's around about a 25 pip range there from the high of this bar to the low of this bar. The fact that it's on the weekly pivot is a good thing, but look at this this trend line as well. That's the other thing about it. There's a little trend line here, which is suggesting that this is the area it's going to get caged. So there's a lot to like about this, in my opinion. And if it does come down to that monthly pivot before the announcement, you are safe. You are effectively safe in your trade, because you know. And I would I wouldn't move stops to entry on this, because if you move stops to entries, you're likely to get stopped out. I'd leave your stops where they are. You know, it's going to cost you a couple of pips, because the actual it's 23 down, I think, and 25 up or something like that. Yeah, it's about 20. Yeah, it's about 25 up, 23 down. So that is the trade, short in the pound on the 15-minute bar, taking the low of this bar and the high of the bar for the stop. Going hyper light, because if it goes down, third of 1%, quarter of 1%, anything like that. So you won't care about it. You know, it's one of those trades that you take because there's a potential, there's a possibility that this goes, and you want to trade that you don't worry whether it works or not. And that's why you go in really light. And also, if there is a trend on this, the trend should really kind of get itself moving. And if it gets itself moving, then you can add to it later. Now, let's see if there's a comparison with the euro pound as well. You could trade the euro pound. You could trade the opposite of the euro pound. The problem with the euro pound is you can't go under the bar. You'd have to go under the daily pivot. 28 down, but there's still some room. So that's what I'd look for. I'd look for weakness in the pound. Somebody's bashing at my door. 1 second.
That'll be the birthday gift coming in from goodness knows where. To be fair,
No, they're not. They're digging up the road. It's all right.
is it birthday cake? No.
No. Right. Anyway, mate, I don't know how close you are to finishing, but we should probably like cover questions and then wrap it up for the day. I'm just posting in our broadcast groupie thing, so that will clicking on that link and you'll see how Jeff and I are managing trades from here on in. There is going to be management with the FTSE 100. If you are long, I am long on the FTSE. If you're long on the FTSE, there's going to be management on that. I will also post in how to manage the pound trade as well. Okay, so pound Swissy. In fact, let's go right back to the top. So we covered the drones. We'll cover the bottom. How do you look at how you took long euro dollar based on your explanation? Oh, that's yesterday. I think that's from yesterday from StarMax.
How I took the
long from yesterday.
The euro
on the euro
from 2 weeks ago.
Yes, and we need to comment on gold for PL as well.
I can show you that trade if you want. That's fine.
Talk a bit on oil. Oh, gold. Yeah, gold. Yes. Let's have a quick chat on gold to start with. So let's have a look at gold. Now, gold, if the market has formed itself a bit of a bottom, then gold is likely to come down. Now, whether it comes down is always a question, and that's the key to trading, isn't it? There's no setup for downside as yet, but it is looking pretty good. So my personal view on gold is that gold comes lower here. You probably want it under the weekly pivot because that's it's going to struggle at this stage to get under that point, and it'll probably continue to bounce around. But if it does get under that weekly pivot and you can get a setup, you know, at this stage you're looking between daily and weekly pivots. But if it gets on the weekly pivot, at least you've got some open water then down to the monthly chart. But the big thing is going to be, have we really started to form a bottom? Is this an area that we can form a bottom from? And my opinion in equities, that is, and in risk on markets, my opinion is that we've seen signs and signals that we may well have done. There's a pretty good probability that we have done, and that should weaken gold. You know, that would mean that people will come out of their positions in gold. They were selling positions anyway to cover the shorts in the equities. But if they can start coming out of their positions because they don't need the cover anymore, then that will also promote some downside in gold. It could come down hard. You know, it's gone up pretty aggressively, so it could come down hard, which means that there could be trades missed. But the way to mitigate that is, and now look at what's happened with gold. This is a 4-hour chart. It's gone up. It's come down. Now it's starting to create lower highs here. So I think waiting for this 4-hour candle might well give you an entry. Stops will be at the highs, maybe even at the high of all these ranges to give yourself some room, and then see if gold really does start to take off to the downside. Again, always go in light because it's pretty much the start of the trend. You know, it's the first lower high. So always go in light for your first one. Give yourself a chance and some room to maneuver. But I like this 4-hour bar. So maybe wait for that 4-hour bar to form. And if it does give you an engulfing bar or something that looks like a selling opportunity, then for me, I think gold would be a pretty good trade short. And again, that might even coincide with the budget. Now, it'd be unusual for a UK statement to really move the market, but I think it's almost like a domino effect. You know, we're starting to see worldwide economies and worldwide governments starting to move for stimulus packages for help with businesses. And as that happens, then risk on will probably come on the table for a period. Not for too long, I wouldn't have thought. I think the coronavirus is probably going to batter the numbers for a few quarters, and we might even get to recession. I don't know, but nobody knows right now because the numbers haven't really come out for that evidence to be proved or disproved. So gold for me is a short. I'd want to wait for a 4-hour chart, but that's a 4-hour bar. but that is a lower high. So that's my thought on gold. I don't know if you wanted to add to that, Jeff.
No, don't trade gold, mate. To me, it's technically in a beautiful area because it's in a nice little range there. So I would be trading back into the range, looking for a lower high, and trading at the bottom of the range. You know, that's my technical stance on it. But other than that, I've got no idea about gold.
And now the Corona, if Corona increases again over the weekend, it will shoot up again. Not necessarily. Now, I'm not sure if Jeff and I may have different opinions on this, but my opinion on the coronavirus is it's got very little to do with the deaths and the numbers in as much that isn't the direct reason that the market is moving. The reason the market is moving in its current way is because of the reaction to the coronavirus. So let's say it increases over the weekend in Italy, and they've already put their reactionary process in place. Very unlikely to do anything. If it happens in America, yes, you've probably got a point. You know, when it starts to happen in the biggest economy in the world, then yes, that will be problematic for the markets. And we haven't really seen that yet. We haven't really seen huge cases in America that shut down anything too significant at this stage, or have we seen that in the UK? So if that starts to happen in some of those developed economies, then yes, you're absolutely right. But if it doesn't, and it's just in an economy where it's already existing and they've already put their measures in, it's unlikely to to move the market negatively. Pound Swissy, where are you? Hold on, I've got to look for that. Pound Swiss. Okay, pound Swiss. Yeah, pound Swiss doesn't look as good to me. No, yeah, see the pound Swiss. Do you know what? I don't know if you guys will fully understand this, but there is a trade that you could put on which covers your pound, and that is for long pound Swiss, probably above this bar, and short pound euro pound. So you are hedging one out against the other. Now, the way you make money on that is by the pound euro moving to the downside, moving to the upside more than the pound Swiss moves to the upside. So you hedge out one against the other. Now, I haven't done enough analysis on the pound Swiss, how it moves, what the percentage movements are on this, but that is one way that you could cover a pound trade. But that's probably a discussion for another day. But I wouldn't want to trade the pound Swiss short. I have to say, it looks like it's in a buy zone, and that's a pretty healthy looking bar. I think that's it, mate. Oh, unless you wanted to cover your explanation on the trade yesterday. I don't know whether you want to do that now or tomorrow.
Mate, for the euro dollar trade, I'll do that.
Okay.
From 2 weeks ago, because that's probably an important one.
Oh, that was from yesterday. That was you were long yesterday, weren't you? You were looking for a long yesterday in the euro pound euro dollar.
Okay, I'll do both because StarMex wants to know about the one from 2 weeks ago. So I'll
2 weeks ago. Sorry. Yeah, you're right. Yeah, cover that.
The one from yesterday, I'll also go through. Okay, so the one from 2 weeks ago was based on exactly the same as I do every single day. It's all about market structure for me. So the market structure is buy here, sell here, buy here, sell here, buy here, sell here, buy here, blah, blah, blah. So once I've established that market structure, I'm looking for the bottom of this range. And we missed this one coming down. And I was so peeved that I missed that because it was obvious and it's set up beautifully. Just not in front of the charts at the right time. This time I was, and although we didn't hit the bottom, we put in a very obvious potential reversal bar here on the weekly chart. Then you just drill down into the time frames until you can find an entry. It's pretty much as simple as that. There's nothing there on the daily for me, apart from the fact that it's confirming everything. This bullish engulfing bar is confirming that this is potentially going to rally, if not reverse. So that's what we're looking for. So here's what I found on the 4-hour chart. I found a very firm base. I found that the impetus for that bullish engulfing bar that we just spoke about, we came back and tested the highs. So the breakout level, right, that little range in there was broken with this bar. We came back and retested it. And then we put in, and I don't believe this is weekend stuff here, big gap down. So waiting. And finally we got the breakout of this range, which was the breakouts in my mind of, if there's such a thing as a neckline here, that's what it was. And I saw this happen, saw the retest, and that was my trigger to go in. That's my MO. So I really should have been in here, but I got a second opportunity and got in here. There were myriads of chances to get into this. There's another one there. There's another one there. There's another one there. Just so many opportunities to get into that move. It wasn't funny, but it's all based on, I'm looking for a long here because the market structure is telling me, the technical level is telling me that there's a long on here. Now I've got to say that there's no way in the whole wide world did I expect this to go to here. Why? Because the market structure is telling me it's not going to there. And as soon as we got to here, I closed up ranks and my stop started getting very, very tight, but the market just kept giving and giving and giving. So, okay, thank you. Totally unexpected. But as it turns out, I think I was looking for about 300 pips off a 35 pip risk, and we finished up with 540, 550 or something like that. Can't remember exactly. So it was a really massive result out of something that that wasn't expected. I mean, I expected to get something out of it, yes, but I didn't expect to get what I got out of it. But that's simply by following the market structure. So, you know, market structure is everything for me. Yesterday, let's talk about yesterday. Okay, yesterday I made an error, and the error was that I didn't heed exactly what I've just told you. What I had was this, and maybe I was using another trend line. Maybe I was using this one, but same thing, exactly the same result. No, I would have been using this one. So what I was expecting, as I always expect, is a test of the daily pivot. Now, you would say that the daily pivot's been tested here. This is early in the morning, and what I can test here is that the daily pivot has tested price rather than price testing the daily pivot. Now, I should have considered that to be a test because it had gone through and came back. If that was the case and I was wide awake and alert to this, there were plenty of opportunities to trade this short. One was here with a pullback away from the trade line. The next one was a retest of that trade line. And I think I said to you guys at the time, I'm going long here because I want a daily pivot test to go short. I think those were probably my words. If it goes to here, then we can bank well, but we've got to take profit before the daily pivot. And if it does go, then happy days. If it doesn't, that's where I'll look to trade it short from. I got another opportunity if I was awake here to trade it short again, and I was asleep, I've got to say, at that point. But I did miss this one. This is the one that should have been traded short as a break and retest of that trend line or that trade line. Didn't get taken into the long, obviously. So no harm done, except that I missed this. And that's my job. My job is to actually catch those moves on a 30-minute trade, especially on euro dollar. So I give myself a massive kick up the arse for that, and don't bank any money. But I didn't lose any, so I suppose there's some compensation in that. There you go, mate. I hope that answers both of your euro dollar questions, and let's not miss the next one.
Brilliant stuff, mate. Okay. Well, if anybody's taken the pound trade, you would have been triggered in now, and that is not really off and running by any stretch. It's probably around about your entry price. It's messing about a little bit here. Euro pound is probably looking a little bit healthier, but we are, you know, at least looking for that to break to the downside. So let's see what happens with that. Okay, so we are done, mate. We are done.
We are done, mate. Have a great birthday.
Thank you, mate. Thank you very much.
What, are you being shouted out for dinner or something? Is that on the cards?
That'll be on the weekend, I suspect. You know, work has to take precedent, I think, over everything else. So I'll be.
Mate, just get a bit in the bank, and then away you go.
Yeah.
You'll be right.
Well, you never know. The pound might end up paying out for me. Thank you, LT. Thank you, buddy. Yeah, but yeah, we'll be, we'll be doing something light today, but I think it'd be the weekend where we'll properly celebrate it. Thank you, Mike. All right then. Well, we are the pound, as I say, is looking okay at the minute, isn't it? It's starting to move at least. So
You're going to bugger up our breakout trade, but I'm okay with that. That's no big deal.
Well, it's not there yet. It's not there yet. You never know. And remember, we're taking profit at the monthly pivot and leaving stops where they are. We will put in. Thanks, guys. Thanks so much. We'll put in our views and management of the trades in the Telegram
Dropbox?
group, in the Dropbox. Yes, yeah, Telegram group, where you guys can find it. And we'll just let you know how we're going to be managing these trades as we go. Because if the FTSE takes off here, then there's going to be add points, and I will tell you where the add points go and what to do with stops. If the pound trade gets down to the monthly pivot and you are effectively pretty much free trading, then I will also help you manage that as well by telling you where to put stops. Okay, so it's likely to bounce to the monthly pivot, so don't just let it go. There's a chance it could still hold there and turn around and go the other way. But remember, the first rule of trading is to try and get yourself a freebie, and there's every chance that this could turn into a pretty good freebie to let run, and who knows how far it could go. All right, then. Well, that is us for now, mate. We'll be back same trade time, same trade channel tomorrow for the last trading show of the week for us.
What time?
And that's going to be at 5 to 8.
5 to 8. That's a date. Don't be late. Have a great day, mate.
Thank you, mate. And see you later, guys. Have a great time.